Good morning, everyone, and welcome to the Quantum Leap Futures morning leap session for Leap Day, Monday, February the 29th, 2016. It is a leap year, therefore we have the February 29th. This is the last day of the month. After today, this day doesn't really exist. My name is Doug McKay. Each morning we come together in these live sessions to take a look at the macro to the micro of the market and drill down, determine where our trade levels are going to be, what our trade plan is, what our targets and our hypothesis are for the day. This is a subscription room. If you're interested in checking us out, I'll put up my contact information in just 1 second. Before I do that, please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. Any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, so if you are interested in checking us out, here's my contact information. Send me an email at quantumleapfutures@gmail.com or give me a call on my phone or send me a Skype request. You will need Skype to get into the chat room. It's easy to do. It takes about 30 seconds to open up an account. Send me a contact at Doug_McKay. I'll be the one from Windsor, Ontario, Canada. There's no website, there's no blog, there's just this all day live. And this is not a commercial venture. This is a group of retail traders operating within a self-organized learning environment. If you like this video, you can check out lots of examples. There's over 300 days of these pre-market sessions, so you can gauge what we do each morning and then what our success rate is during the course of the day in terms of our hypotheses. Also, if you like what we do, please follow me on Twitter at Crazy2. Okay, so let's just take a look at Friday. Friday, we opened up outside a range, an open auction outer range, and we are right at our weekly ATR upside target. And a key line for us up here was this 61.75 area. And we got up to the 61. Our half gap fill was down here at the 1955. So we were looking for a rotation down to test that gap and see if we found responsive buyers between there and the 54. Remember that 54 was a LVN for the Globex session. But if we got below that, then we were looking for them to come down to test the range high from Thursday down to the LVN of the upper distribution, and we were looking for responsive buyers to step in between here and here to rotate us back up, and I thought to take us up and take out the overnight high at the 1968.75. They rotated back up, but they rolled it back over, and they came down and tested a second time, tried to hold out, came back down a third time, dipped down to the LVN. Responsive buyer stepped in again, put in another lower high, and at this point in time, it was becoming quite obvious that the bears were still controlling, the session, and that we would get a rotation down into, which was one of our main targets below, down at that 42 level. And so I started taking the short side every time we got back inside of the prior day range. And you had to, I had a discussion with somebody on Friday afternoon about this, whereas they were looking to get long when the market was clearly telling us that the longs were going to get trapped and they were going to get taken down into re-auctioning this poorly auctioned upper distribution of Thursday. Pay attention to your fractals. I mean, the fractals and the fact that we kept on failing to hold above the VWAP, and the VWAP did not offer a lot of support in either direction on Friday. So just when the market is telling you that your main hypothesis is rolled to your second hypothesis, you have to go with that. Don't be stubborn. This person got seriously hurt because they didn't want to. They kept on looking at the long. They had that 1968-75 Globex high in their head, and especially once we took out the overnight low, there was only a 28% chance they were going to take out the overnight high. Just thought I'd mention that. So let's take a quick look at the news. We had 8:30. We had a bunch of Canadian news. Gave the market a little bit of a boost. At 9:45, we've got Chicago PMI. 10 o'clock, we got pending home sales. That's about it for the day. The key today is it's going to be the end of the month, and we got to be watching for whether or not critical mass kicks in, and we'll talk about that in a minute. I do want to just take a quick look at the Commitment of Trader report, the COT. Here's your zero line. Here's the ES. The yellow is the small spec. The dark blue is your large spec, and your light blue is your commercial paper. You can see that both commercial and large spec are net negative, whereas the small spec, the retail, is net positive. And smart money has left the building. How high can we rally? I don't know. All I'm saying is that when the large spec and the commercial have got net negative, you got to be careful to the long side. All right, so let's just take a quick look at. I always like to start my day with a basic chart and taking a look at the macro and the micro in terms of where we are within the trends. I start with a monthly, and I simply I'm looking for slope and separation and where the trend is being challenged and or violated. You can see that the monthly we've had this beautiful upward trend, and then late in the year we started challenging it. So far, January and February, we've been below the 9 and the 20. January right now, as it sits, is a positive. I'm sorry, February is a positive month. Our month open is 1929.75. That's going to be a battle to hold that today. But the overall trend has been violated on the monthly. On the weekly, last week we were able to pop back up and get above the 9. We are below the 20. So we do have a downward trend, but it is being challenged right now. And so far we're holding, overnight we're holding above the 9 on the weekly. But the overall trend is still down, but it's weakening. On the daily, a little bit of a different story. Let me get rid of the open interest here. You can see that we've rallied, and we have slope and separation to the upside. We're holding above the 9 and the 20, so we are starting to get an upward trend on the daily. On the intraday, we had this upward trend. They've rolled it over, and now they've taken it back. So we've got consolidation on the 4-hour, but we are trading above the 9 and the 20, so we could get a continuation pattern here on the 4-hour. On the 1-hour, a little weaker. We had a nice strong trend down, and then we rallied overnight, and so far we're challenging and violating the downward trend and possibly starting an upward trend on the 1-hour. On the 30-minute, and I want to point this out too about Friday. Being aware of the larger time frames is important. And if you've been watching the 15-minute and the 30-minute, okay, in the RTH session on Friday, you would see why my bias was definitely to the downside, and I was shorting everything. I don't even think I took one. I think I took one long all day. Everything was short. If you follow your, don't get so minute into the smaller time frame that you're ignoring what the larger market time frames are showing you. They'll generally show you the bigger general direction. Anyway, we've had this really strong trend down, and then overnight we've rolled over, and now we're getting an upward trend. We do have a naked cross at 1935 on the 30-minute. If we get below the 9 EMA, look for them to come down, take out that 30-minute naked cross. Going to the 15-minute, same thing, beautiful upward trend now, good slope, good separation, a little bit of a technical gap, possibly even a foo-bar, Mr. Sneaky. Oh, I wanted to show you this. So on the 5-minute, we do have an upward trend. We do have a technical gap. They're coming down to close the gap. But what I wanted to show you is, and again, I know I talk about this setup a lot. There's a beautiful, and I put it in the room yesterday. There was a beautiful foo-bar Mr. Sneaky tech gap just not long after the open last night. I took this trade to the long side. I got long 39.50 and rode this up. This also showed up at the same time that a double Renko reversal showed up, and when you get good confluence like that, it was a good trade. I didn't do a lot of trading last night, but I did catch this trade, and it paid me well. So overall, on the smaller time frames, as we move down to the smaller time frames, we are seeing a bit of a rally beginning. Okay, let's take a look at the larger structure of the market. So we're currently trading at 1946. We've got the CLVN at 41, but this has been violated multiple times, this 41. I'm actually going to be moving my key trade area here up to 43.25, and I'll show you why when we get to the smaller time frame. Once I see a level that's been violated, in the Globex and on Friday, in the Globex overnight multiple times, I start to look for a smaller time frame. But in terms of the bigger picture, we have been down in this balance area with the value area high at 33, value area low at 1859. I got to bring Friday in because it's still within the range of the micro composite, even though it's outside of value. So the value area high doesn't shift much. It shifts to 33.50. Once we broke out on Thursday, the most traded price in the 2 days, Thursday and Friday, is at the 49 level. So we want to pay attention to that's the first price they're trying to hold above the breakout. And I always find that these are important levels, because if they can't hold it and they get below this 43 and below 41, they're likely to come down and test the value area high, and most likely come down into the last area that they found value before the breakout, which is all the way down here at the 23. So right now we have this distribution zone around 49. You got 47.25, 52.25. In this distribution zone. It's going to be choppy in that area. The key line above us is going to be 60.75. Key line below us is going to be 33, with the warning line between that 43 and 41. You want to be below 41 to get short. You want to be above 43.25 to get long, and I'll show you why. If we do get below the 41, look for them to come down, and first target will be that 38 with the micro composite value area high and a key CLVN and our key line in the sand, which is going to be here at 33. Below 33, I'm looking for a bigger move down into the 23 and down into this distribution between the 23 and the 17. possibly even down to the 09 area. And I'll show you why 09. 09 is 1908.92 or 1909 is our daily ATR downside target. So we do have range to come down into this lower distribution and down to that test that CLVN at 975, 1908 area. If we hold above, I'm looking for a rotational day with an upside bias. Remember, if we get below the 33, they're probably going to go for the month open, and that one of the key targets you should have below 33 is the 1929.75, which is their month open. So they'll gun for that and try to get us below it. But if we hold above that 41, they'll start working up towards the other side of this balance, targets at 47, 75, 49, and 52. And then if we get above 52, then I'd look for them to push for the the high from Friday RTH session at 61 and test the other side of this balance up here at 61. Above 61, I'm gunning for the 64 with 62.50 as my first target, and there's key level up here up at 67. 66 is our daily upside ATR target. Our 20-day ATR target's running 38.08, but more importantly, we have monthly critical mass up there as well. Our monthly critical mass is at 1967.75. So if we get above 1967.75, which is a key CLVN as well, critical mass could kick in, the bears could step aside, and the buyers take control and move us up into the 70s, if not possibly the next big target up here at the 87.50 area. So let's go down, take a look at the overnight. We just did put in another new high, so I'm going to have to make a bit of adjustments on some of my levels here, so bear with me. But let's do the downside first. Our overnight low is down at 27.75, one tick above the naked VPOC at 27.50. Our overnight high is now at 48, and we could still put another overnight high in. That's still possible. Our overnight VPOC is not likely to shift. It's at 1940. And we do have a new LVN that we just put in here at 44.25. Kind of changes where I was going to be using the 43. Well, we have 43.50. So I'm going to use the 43.50 up into the LVN at 44.25. And then the other LVN we want to pay attention to is this 35.50. And target is going to be that 33 area just above, or just below, I should say, that LVN. All right, there's not much more information we need. We've got a triple distribution. We've got the LVNs between the distributions. The HVN up here is 45.50. We've got the value area low from Friday at 46. So I'm done with my overnight. Expand this out. $45 has been heavily auctioned so far. So what I'd be looking for today is, if we hold the 41, even down to the 35.50. Like I said, I'm using the 43. I'm going to move this down so it incorporates the 41 through to 43. I don't want to really get long until I'm above 46. And then I can get into, take out the overnight high and look for the move up into the 50 and 52. There's a huge order sitting up at 50. I don't know if he's still there. Let's see if he's still up there. It's like 5,000 contracts up there. So we got to see 57. You got 57, 67, 981, 849. So if they get inside of the value area from Friday, I think you got a good probability of taking out the overnight high and moving into that 50 area. I'm going to use 50, actually 49.50 as my target inside of value. Of course, my first target is going to be the overnight high, but I'll be looking for them to come up into the 49s and then see if we can get through those all those orders. There's almost 7,000 orders between 49.75 and that 51 area, and looking for continuation up into the midpoint, the VWAP and the VPOC, all up here in the 52 area. First resistance that I see coming in is going to be in the 54 area, and then above 54, looking for them to come up and test the value area high. Anything above the value area high, I'd be looking at that 61 area. And above the 61, we've got targets at 64.75, your daily upside ATR target at 66.75, and then monthly critical mass up here at 68. Above critical mass, then I'm looking for a possible trend day, and I'd be looking for a move up into 70.50, 72, 77, with the next big target up here between 82 and 87. Don't know if that's going to happen, but if we, I'm looking for a rotational day. But once we get above critical mass, then you got to be thinking possible trend into the end of the month. To the downside, below the the 46, I'm looking for a rotation back to take out the gap close at the 42 area and test the range low in that 41. Below 41, look for them to move to the 40s, but I would really be looking for them to come down into the 38 and test down to the 35.50, the LVN that separates the middle and lower distribution from Friday. Below 35, down to 33, and a test to anything below 33. We're back in that microcomposite value area. And I'd be looking for a move down into the overnight low and the test of the month open with the main target down here at 27.50, 27.75, especially if they leave the overnight high alone at 48. That's going to be a key sign. If we leave the 48 alone and get below that 35, you got to start thinking, mainly to the short side, selling any rallies down into that 27, with the next big target being down here at the 23, the microcomposite VPOC from the 5 or 6 days before we just broke out, or the last trade day that we broke out. I do have to adjust some downside targets here. So our daily ATR target off of 1948 minus the 38.08 is 1910 now. So this moves up 1 point. And then our weekly ATR shifts, not that I think we're going to hit it, 1948 minus 74.825 takes us to 1873 and a quarter. Everything moved up a point. So we're going to open up just inside a range, possibly. We still have a few minutes, just inside of value. So look for two-sided trading here. I'd be looking for the possibility of them coming down and testing the 41 area. If they break the 41 area, look for responsive buyers down here in the 35 to 38 area for rotation back up into value and up towards that 1950 area. That's my main hypothesis. If we see them move off of the 41 and get inside of the value area, then I'd be looking for a rotation up into the 52, possibly up into the 56, 57 area, and then I'd be looking for responsive sellers to step in there to take us down through and chop around with, end of day late probe down into the 35, 33. Anything below 33, look for them to, even 35, look for them to come down and test the month open again and possibly come down to the lower side. We're not going to come close to critical mass, I believe, today to the downside. It's the upside that I'd be looking for. So if they rotate up through value and break out a range and come up and test the daily ATR and get above that 67.75 area, then we could see critical mass kick into the upside. So I'm really looking for critical mass and a possible trend day to the upside if we can get outside of range and outside of value, but not so much to the downside. I think anything to the downside is going to be a slow grind down towards that 29 and probably a late day probe down into the 23, but not much more than that. Anyway, that's what I'm looking at in the ES. Currently, right now, we're above the Keltner center line at 43.50, 43 and a quarter. A move up to test the upper Keltner line is going to take us up into that 50 area. A move down below the Keltner center line, take us down to a test of that 40 Globex VPOC and 37.75 area, probably even the 35 area by the time we get there to test the overnight VWAP and the Keltner lower line. I did take a low on gold. I want to show you this. I mean, I'll keep showing you these setups until you're comfortable taking them yourself. I took this last night, and I've been long gold all night. Beautiful. And it showed up at the right time too, which was really great. I love when we get to this 8 o'clock to 9 o'clock level and we get great setups. So there's your 15-minute. I always use the 15-minute for gold. There's your FUBAR. There's your Mr. Sneaky. There's your technical gap. Your entry was on this one right here. I actually got in at 12:20.40, and I'm still running one in gold right now and looking for a move. I'll show you where I'm looking. We're in this area right here. We're above the 22.10. I'm looking for a move back up into the 38 area, the microcomposite VPOC for this balance area that we're in right now, and possibly even up into the 1241, 1242 area. And then if we can get above this 1250, more importantly, the 52.70, another continuation to test up into the 60s on gold. Right now, I'm running my stop down at 2090 on my runner. Just hoping to get a bigger move up here and see if I can stay in my gold trade. I haven't been able to stay in my gold trades lately, so I'm just letting it work. Anyway, that's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.